Once again, we have breaking economic news. Those retail sales numbers that we told you about just a second ago, they come in weaker than expected during the month of May. We've got a portfolio manager standing by to give us his insight on this and other topics. Barry Schwartz is Chief Investment Officer at Baskin Wealth Management. Welcome to the program, Barry. Always great to have you. We hope you're having a good summer.
Thank you, Paul.
Your take on what we've heard, a little softer than expected. Does this reflect perhaps the Bank of Canada gradually succeeding at what it wants to do?
Well, it's a little bit old data, of course, because we're looking back at May and April. But I think it's clear if you're looking at the corporate earnings of some of these companies, whether it's the railroads and American Express, which you mentioned, the big boom from the COVID spending and the shipping of goods is slowing down, and obviously interest rates are having their impact. And it's just more evidence clear to me that both the Bank of Canada and the Federal Reserve should stop hiking interest rates ASAP. Housing prices are completely unaffordable because of rising interest rates, as well as hurting the consumer. Maybe what they wanted. We got the slowdown, so now it's time to really communicate to North Americans that we're done raising interest rates.
Just before we move on, one other data point released by StatsCan today. There is a flash estimate of June retail sales. That is a preliminary estimate, very much subject to change. But StatsCan saying that retail sales likely were unchanged in June. So StatsCan forecasting on a preliminary basis flat retail sales for the month of June. Okay, you mentioned corporate earnings. I know this is something, and our viewers know this is something you watch very, very closely. What is your take thus far, Barry, on what we've seen mainly south of the border with big U.S. corporations reporting second quarter earnings?
Yeah, so I guess we got all the U.S. banks, which was the bulk of the earnings so far. Next week is a crazy week with all the technology companies. But the U.S. banks, incredible results. And I'm kind of sad that I don't own J.P. Morgan or Goldman Sachs anymore, because these companies truly benefited from the mistakes and worries from smaller banks. Mm-hmm. I think we've all forgotten about those bank crises that we had a few months ago and some of the U.S. banks, smaller banks blowing up. But they've benefited from strength and deposits. And, of course, strong employment, pretty good economic growth. Nothing on fire and nothing huge, but that's good for banks. Really, the weak spot, of course, is the investment banking, new issues. That's been slow, and that makes a lot of sense. With interest rates at these levels, there's not going to be that much financing, and things are going to be slower until the economy starts to pick up.
What do you expect from other sectors of the S&P 500 as those earnings roll out? A common narrative is companies exceeding reduced expectations.
Well, look at Netflix last night. It beat earnings tremendously. It had really good free cash flow. The balance sheet was stronger, and yet got beaten up, taken to the woodshed. Tesla, I think, beat earnings as well. So probably stocks have gotten ahead of themselves. Some of the runs in some of these stocks this year, I think Tesla's up like 150%. Netflix was up 60% going into yesterday's earnings. And so these stocks have pulled back. Just their earnings probably didn't meet the highest level of expectations.
Barry owns Netflix on behalf of clients, and he'll talk to us a bit about that in our next segment. You've also brought us some interesting facts on the relationship between rising or falling interest rates, rising or falling inflation, and stock market performance. We have a board we can put up here. You tell us, Barry, what this is showing us. It's not very complex. During periods of rising inflation, the S&P 500 over that long stretch of time from 1928 to 2021 has risen 5.5%. During falling inflationary periods, where we are right now, 14.7% has been the gain. You can take it from there.
Yeah, so, and this is, of course, only to 2021, and we all lived through 2022, where there was tremendous rising inflation, and you saw the S&P 500 return last year. It was decidedly negative. And inflation in the U.S. peaked in around June or July of 2022, and that's when the markets took off. The market predicts the stock market. Predicts the economy. Not the economy doesn't predict the stock market, right? So the stock market tells you exactly what's going to happen many months in advance. That's why the people were confused. Why is the stock market rising in 2022, even though inflation's going to go higher? We're definitely going to have a recession, said all the economists. All the earnings are going to be in trouble. I mean, no one obviously can figure those stuff out in the short term, but the stock market did, and it told you that inflation, when it starts to go down, that's when stocks start to rip, and we're clearly seeing it now. The question is, has inflation bottomed? Is it near the end? And probably that's the case. such a huge run, Paul, in the past few months in the NASDAQ and the S&P 500. So that easy money is over. But that doesn't necessarily mean that it doesn't mean that you're not going to still do well going forward.
What about that recession question? Do you think we're headed at least for a mild North American recession?
Not at all.
No,
not at all. As long as the central banks stop raising rates from here. We have such strong employment. Nothing's going hugely great. GDP is not increasing at dramatic levels from here, but people are still spending lots of money. When people have jobs, they pay down their mortgages, they spend money, they go out. It may not be at the pace that it was 6 months ago, but I see zero evidence of any recession in 2023.
So you think the Fed should stop raising interest rates now, but it sounds like by the time this is over, that you will believe that the Fed has done a pretty darn good job here at reducing inflation and avoiding a recession.
We'll never know.
Achieving the soft landing.
Possibly that's the case. We'll never know. Maybe if we left the markets unchanged, this would be the end result anyways. No question the Federal Reserve sped up the cooling of the economy. Supply chain, that supply chain issue that caused all the inflation, that wasn't going to stick around forever anyways. So these are the natural boom and bust of the economic cycle. And I think we're now on the upside of a recovery here.
Okay, that's Barry.